Hey everyone, welcome back to Corporate Decoder, the place where we unpack the hidden stories in company filings. Today, we're looking at a report from Tempest Therapeutics, Incorporated, where things got a little complicated with stock, warrants, and a major acquisition. This document is a Form 8K filing, which companies use to announce major events that shareholders should know about right away. Think of it as a breaking news alert for investors. The big news here came out on the 3rd of February 2026, and it involves a significant change in the company's structure and assets. First up, let's talk about a big deal they inked back in November of 2025, but it officially closed on the 3rd of February 2026. Tempest Therapeutics entered into an asset purchase agreement to buy certain assets related to 4 different gene therapies. These are therapies like ERI-2003, ERI-2206, ERI-3003, and ERI-3206. These are fancy names for potential treatments using modified cells to fight diseases, specifically CAR T-cell therapies. They paid for these assets by issuing a hefty chunk of their own stock, over 8.2 million shares. This is a massive injection of new ownership into the company, potentially changing who holds the reins. Then things get interesting with warrants. On the 20th of January 2026, the company announced a dividend of sorts, but not in cash. They decided to give out warrants to buy shares of their common stock to everyone who held stock on a specific record date. These warrants were officially issued on the 3rd of February 2026, alongside some existing warrants that also received new ones. In total, they issued around 6.7 million warrants. Now, these warrants give the holder the right to buy 1 share of common stock at a price of $18.48, but there is a catch. You can only exercise these warrants once the company has filed a registration statement with the CC. This means the shares aren't immediately available to buy, and the company has to jump through more regulatory hoops. These warrants are set to expire on the 3rd of February 2031. This section confirms the asset acquisition we just talked about. On the 3rd of February 2026, Tempest Therapeutics officially completed the purchase of these gene therapy assets. They did this by issuing those over 8.2 million shares of common stock. This marks the completion of a significant strategic move for the company, aiming to expand its pipeline of potential treatments. Here we see that the warrants we just discussed were not registered with the Securities Act. This means they are being issued under specific exemptions, and the company intends to file for registration later. Similarly, the shares issued to the sellers of the assets were also offered in a private placement, meaning they weren't publicly traded initially and also relied on exemptions from registration. This is where we see the real impact. After issuing all those new shares for the asset acquisition, the ownership structure of Tempest Therapeutics dramatically changed. The original shareholders now own about 38.7% of the company, while the party that sold the assets now owns a whopping 61.3%. With the new owners holding the majority stake, following some further distribution to other parties mentioned, the sellers' members and pre-closing equity holders are expected to hold significant stakes, with one group potentially holding around 35.9% and another 25.5%. This means a substantial shift in who benefits from the company's future success. With such a big change in ownership, it is no surprise that there are also changes in leadership. Jeff Nickel resigned from the board of directors. Michael Raab, who had been the chair of the board since 2018, also decided to step down from that role, passing the torch to Stephen Brady. But the biggest executive change is the departure of Stephen Brady as president and chief executive officer. Taking the helm is Matt Angel. Dr. Angel, who is 45, has a strong background in biotech, previously holding leadership roles at Factor Bioscience Incorporated, Accession Therapeutics Incorporated, Accession Biotherapeutics Incorporated, and Novellus Incorporated. He brings a wealth of experience in founding and leading scientific companies. In connection with his new role, Dr. Angel has been granted an option to purchase over 269,000 shares of the company's common stock. The price for these shares will be set at the fair market value on the date the option is granted. This option vests over 4 years, meaning he'll earn the right to buy these shares gradually as he continues to work for the company. This is a pretty standard incentive for a new CEO to align his interests with those of the shareholders. He'll also receive an annual base salary of $650,000 with a potential annual bonus equal to 50% of that. The employment agreement also outlines severance packages, including salary continuation and health insurance support. for various termination scenarios, including those related to a change in control. There is also a mention of Nicholas Meisters, who was rehired and entered into an employment agreement consistent with previous filings. He is likely taking on a key finance or strategy role, given his title. Now, this filing doesn't contain detailed financial statements like a quarterly or annual report would. It is primarily about the events we've discussed: the acquisition, the warrant issuance, and leadership changes. However, the fact that they are issuing millions of shares and warrants and completing a significant asset acquisition tells us they are making big moves to shape their future. Looking at this filing, Tempest Therapeutics is clearly in a period of significant transformation. The acquisition of these gene therapy assets, particularly the CAR T-cell programs, suggests a strategic pivot towards what is often considered a more cutting edge and potentially lucrative area of biotech. The issuance of over 8.2 million shares to acquire these assets, resulting in the sellers owning over 61% of the company, is a massive dilution for existing shareholders. This means the original owners of Tempest Therapeutics now have a smaller slice of a potentially larger pie. The introduction of warrants is also a classic move to either generate future capital or incentivize stakeholders. However, the fact that they are unregistered and require a future SEC filing before they can be exercised introduces uncertainty. Investors will be watching closely to see if and when that registration is completed. The leadership changes are significant. The departure of the previous CEO and the appointment of Dr. Matt Angel, with his extensive entrepreneurial and scientific background, signals a new direction. His compensation package, including salary and stock options, is substantial and reflects the company's expectations for him to drive growth. The key risks here revolve around the success of these newly acquired gene therapies. Developing and commercializing these types of treatments is incredibly expensive and fraught with scientific and regulatory hurdles. The company's ability to fund these efforts, especially given the shift in ownership and potential future capital needs from exercise warrants, will be critical. In conclusion, Tempest Therapeutics Incorporated is undergoing a major makeover. They've acquired promising new assets and brought in new leadership with a strong scientific background. However, the significant dilution of existing shareholders' equity and the complexity surrounding the warrants introduce elements of risk and uncertainty that investors will need to monitor closely. It is a bold move designed to reposition the company for future growth in a highly competitive biotech landscape. Alright, that is our breakdown of Tempest Therapeutics' latest filing. What is your take on these numbers and what they signal for the company's future? Do you think these new gene therapies will be a game changer? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate filings. Don't forget to check out our Discord community linked in the description for more discussions and real-time analysis. Thanks for watching, and we'll see you next time on Corporate Decoder.